I think that there are two parts to that. The one is that, I mean, insurers, like any industry, have not necessarily always been as honest or as straight up and down as they could or should be. I think if you look at insurance over a long period of time, there definitely have been cases in South Africa and in the UK in particular, where the regulator has come down quite hard on what they view to be unfair practices in the industry. I think largely that has changed. The regulations have come down. There are regulations like treating customers fairly, etc., that are quite embedded in the insurance industry as a whole. So I think, and I mean, if you were to look at fully underwritten insurance business, I don't know what proportion of claims get paid, but it's well in excess of 99%. So then if we say, well, why isn't it 100%? And that's the other component, I think, which is quite critical, is that the insurance contract, in essence, is one between the customer, the insured, and the insurer. And it's based on the concept of, there's a Latin term, which I won't mention, but it translates as utmost good faith. Because clearly, as an individual, if I take millennial Joe, Joe has the best view of his own health. Okay, so the contract's one of utmost good faith. So if Joe says that he's a non-smoker, when in fact he's a smoker, he's doing that intending to cheat, defraud, whatever you want to call the insurer, and get a cheaper premium. And that's the essence of what we would call non-disclosure or under-disclosure. And there's certain rules about that. But in the extreme case, the rule might be not to pay the claim. Otherwise, you could proportionately pay a smaller amount. And I think that's one of the key reasons about the lack of trust, but it's also potentially a lack of information or amongst the general population as to the importance of honest, open disclosure, so that there are no surprises at claim stage.